Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the market. We're going to look at the S&P 500, the Dow, IWM, and VIX, and then we'll look at some shorter term time frames to see how we're doing the day trading for the S&P 500 with all of this wonderful volatility back and forth. So back on Friday, it was one of the most significant changes in momentum that I've really ever seen in the market, just in the sense of how bearish we were with the continuation to the downside after the week close on Thursday, and how the bulls saw their V-shaped recovery. We saw a short squeeze play out and a very significant bounce. So it was really the tale of two time frames, or the tale of two, whatever you want to call it, where the bulls were sleeping to start the day, but they came roaring back, and we'll look at that in just a moment. But what it gives us is a big bullish reversal candlestick on the daily. So I'm not anticipating this to change the trend anytime soon. And right now we have a lower high, lower low pattern. So the bulls have a lot of proving to do. They certainly had momentum in their favor as we head into Monday. We're going to look for follow through. We have to confirm these bullish reversal candlesticks. Remember the last bounce attempt we had earlier in the week, we did not get any confirmation. The bulls did not see the follow through that they needed, and we closed weak down at the low of the day on the second day of that bounce attempt. So we need another green day. We need to break the high of Friday, which is 2638 for SPX. Have to break that and see another green close. But even on this bounce, unless we break 2727, it's just going to be a lower high. So to change this trend on the bounce, we have to form a lower high, which is most likely, then a higher low and a higher high. That's when the momentum shifts back to the bulls. So the fact that we set that lower low right on this pullback was notable because that erased the opportunity for the bulls to attempt a higher low. So one step at a time, we need a follow through confirmation candlestick to Monday. And then from there, we will need a higher low and a higher high on the daily to shift the momentum back to the bulls. RSI is bouncing right from oversold. And on the weekly time frame, we did not hold the middle Bollinger Band. We lost that for the first time in years, but there is a lower wick showing bulls buying the dip. All in all, where we stand right now, those 2 weeks of pullback gave back months and months of bullish action, taking us all the way to October. So we essentially gave back 3 months of bullish action with 2 weeks of this pullback. So checking in on the Dow, we had the same kind of reversal candlestick, big long lower wick. That's our new key support. High of the day is resistance, 24,382, has to break and close strong on Monday. And we also have exponential to be watching on these names, the exponential resistance 4 in the 8 period, which rejected the high of the last bounce attempt. Weekly chart, tried to hold the middle Bollinger Band, just lost it, and pulling back, but still maintaining a higher low. We can see a base of support here of 23,242, and we did form a higher low just above that level. So all in all, as far as this weekly chart for the Dow is concerned, we only lost one little, very brief level of consolidation. Other than that, we had not consolidated and established a level of support, and so that leads me to say that this trend is still very much intact on the weekly time frame for the bulls, and it was just a lack of resistance, or I should say a lack of support, that was established on the way up. And the steeper you climb to the upside, the more swift the pullback is going to be, and the opposite is true. The steeper the dump, the sharper the bounce, which is exactly what we saw play out on Friday with the short squeeze that we'll look at in just a moment. So IWM holding the 200-day moving average for the second test in a row. Bullish reversal doji. Bulls need to break 147.94 on Monday. See a solid green day. And again, we have our resistance level to be watching, the high of the last bounce attempt on all of these individual names. Weekly chart for IWM bounced off the lower Bollinger Band and 50-week moving average. IWM made it all the way back to September price levels, so giving back even more time frame of climb that the bulls had pulled off in late 2017. But again, all in all, still not looking for any kind of trend change unless we get a lower high and lower low on the weekly chart playing out. So on this bounce, if we see, higher lows and higher highs as we recover back to the all-time highs, just fine. The uptrend remains intact. If we see the dump, a solid bounce attempt for a couple weeks, a lower high set, and then we pull back to a lower low, just like what we saw on this daily chart. If this happens on the weekly chart, then that's a change in the weekly trend, and that is a notable shift. So it still hasn't happened on the longer-term time frames that would start favoring the bears. but it's something that we're keeping an eye out for once we get a more significant bounce on the weekly chart. So looking at the VIX, we have a tightening equilibrium pattern with our high of the pullback, or our high of the breakout, 50.30, our higher low of 21.17, and then our lower high of 41.06. And you might be saying, how could we not head back up? You know, if all these markets hit lower lows on Friday, how come we didn't hit a higher high on VIX? And the reason, and we missed by 18% from the high, but the reason is, of course, the short squeeze that went on that catapulted that bull move a bit more extended. And because we don't have those same short squeeze conditions on VIX here this time, we did not see the price get anywhere near that high. So the range right now is support of 21.17 and resistance of 41.06. That's the range to be watching on VIX, and we'll see if we get a break next week. More likely than not, with 5 days of trading, we'll likely see a break of that range, but also wouldn't be surprised to see a few days trading within that range while things settle down a little bit. Weekly time frame for VIX, big upper wick of profit taking. Still in breakout mode, so we're not taking our eyes off of this daily chart, and unless we lose the higher low pattern, which would mean the market bulls are recovering. So let's now look at the 5-minute time frame on SPY and some signals that we were looking at. I traded in the past 2 days, Thursday and Friday, I traded SPX and SPXL, SPXS and SPXL, which are leveraged ETFs for SPY. I traded them each probably 18 times in that 2-day span. And just flipping back and forth both directions. I don't care what direction it is. What I love about this volatility is with high volatility, you get clear equilibrium patterns, and breaking those patterns are really nice signals that follow through and get significant follow through due to the volatility. So here, the setup we watched all morning, it was just patiently waiting for a break. Look at these moving averages. We had a channel of 100 period moving average support and 200 period resistance. We rejected from resistance at the high of the day. We bounced off support, rejected from resistance 3 times, bounced off support 6 times. Here is our clear bear break candlestick where we knew to be going bearish, and I was live at the time, and it was a very clear bear break. We dumped down. That was one clear bear trade, and then the bears kept control for the rest of the morning with the bulls not really able to put a whole lot together. So I did make a mistake where on Thursday I went 7 for 7, being patient, waiting for clear setups, and flipping those names. And my strategy I'll go over in just a minute, but I went 7 for 7, and on Friday I started with a loss on my first trade, and that's because I made a premature entry. And one of my rules is wait for the first 15 minutes of trading to go through and wait for things to settle down a little bit. The highest risk and reward is in the first 15 minutes, but there's also a lot of irrational price action where we're not seeing, you know, clear ranges established until the morning plays out a little bit more. So after my first loss, I, you know, took that loss, got stopped out and said, all right, need to, you know, stick to my rules, and then went probably 8 for 9 for the rest of the day after that. So it was a lesson to myself. It's a general rule of thumb I usually stick to, and I didn't stick to it this reason. And looking back on it, maybe because I was excited and knowing we were going to have a volatile day and trying to you know, keep that momentum that I had going from 7 for 7 on Thursday. All kinds of reasons that I might have jumped in, but again, it's just a reminder, and I'll learn from that mistake, and I won't do it again anytime soon, but I'll probably do it again sometime in the next few years, and it will be just another reminder yet again. So after that dump, the bulls turned around, and this is the V-shaped recovery. This is a short squeeze, and I can say that because just watching tick for tick, the bears had been in complete control of the entire day, and then out of nowhere, it's a V-shaped recovery. We didn't even form a 5-minute higher low and higher high. This is the candlestick right here where the short squeeze got underway. Normally, I would anticipate a nice strong bull move. We broke the lower high pattern. Then I would look for a higher low and a higher high in the change in momentum. This big bull candlestick exploded. We started seeing a short squeeze. It was all bullish action with no pullback, but it did give an opportunity for a bearish entry, which I made another bearish entry here once we got really overextended and the RSI broke 70 on the 5-minute time frame for that pullback. So my strategy is I enter with a full position on SPXS or SPXL, and very quickly, on average about 3 minutes into the trade, I will take half of my profit. And that will allow me a lot of wiggle room in terms of space before my second half of my position is back to break even. So let's say I buy in, I'm just going to use rough round numbers. Let's say I buy in at $257 and I sell at $257.10. Instantly, the cost basis of the second half of my position is $256.90, and I have a lot more space. I can set the stop loss to break even. Worst case scenario, I break even and take it from there. Best case scenario, the trade runs in my favor in terms of me being able to let it run a little bit because I have already ensured that worst case scenario, I'm going to go break even on the trade. So I've been doing that with this volatility. and I'm liking it more than options. I've traded options plenty, but just in terms of not having to deal with any time decay or the market makers and the bid and the ask spread when things are so volatile, I really like eliminating that factor and just plain old common shares. And with this kind of volatility, you can really rack up some nice gains quickly, especially if compounding profits. But when these moves are so clear and they get so much extension in the direction that they break, it's really nice for some follow through. So we saw a big bull strong move in power hour heading up and a new high of the day. And then we saw some brief consolidation, very healthy at the end of the day, some profit taking, not surprising. So where we stand on the hourly chart, which is also very important to be watching, this hourly chart has not consolidated. It was just a V-shaped bounce. This hourly chart will need a higher low and a higher high to begin changing this trend for the bulls. And we don't have any consolidation on the hourly chart, and we don't have a higher low. We do have the hourly 20-period support now to be watching. Ideal scenario would be to hold that support level. And really what the bulls would love to see is some extended hours action, building a base of support, and then seeing continuation first thing Monday morning once the bell rings. So I appreciate you all watching. We'll see how it plays out, and have a good rest of your weekend.